forward exchange, what other kind of exchanges are there?
Hmm.
And there are two others. There's an improvement exchange where
Okay.
you can actually do improvements to the replacement property with exchange funds, which is a really interesting thing for our value add investors.
Yeah, that's
Um,
great.
and then there's a reverse exchange. And the reverse exchange is where you acquire the replacement property first. And so MJ may be asking, when would you need to acquire the replacement property first?
Hmm.
Well, we got a wholesale deal that comes our way, and this thing needs to be closed in 10 days. It's 65% of market value, and we love it. And we don't
Got it.
undersell the relinquished property. We need to take this down now.
Hey, 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 welcome back to the Peak Podcast, where we discuss the latest in REI tech, trends, and inspo. My name's MJ. I'm going to be your host, and I'm super pumped to welcome Michael Velasco to our show today. He's the founder of 1031 Exchangeable, where he's basically saving investors and entrepreneurs a ton of wealth so that they don't lose their profits that they work so hard to earn. So, if you are an investor, if you are a business person, an entrepreneur, you're building your empire, you're dealing with real estate, you need to tune in right now so that you don't miss all the tips and tricks from what it is to work with 1031. So, with all of that being said, Mike, welcome to the show, man. How are
Yes,
you?
thank you so much for having me. I never know, like when I'm on podcasts, I never know where to look. So you have to excuse me. Do I look at MJ? Do I look at the
You're all good.
camera? Do I look away? Like,
Whatever's
don't
clever.
make eye contact. It's just because I'm trying to pay attention to MJ. So I'm happy to be here and pumped to tell everybody about 1031 exchanges.
Yeah, heck yeah. So, like, tell us, before we get into it, I always like to make sure everyone's operating from the same baseline, right? So, as investors, we always hear 1031, 1031 exchange. You're doing a 1031. Have you identified a property? What is a 1031? If you had to explain it in really basic terms, what exactly is it?
Yeah, I'm gonna start there. I think one of the things I want to do, MJ, if you'll let me, is just tell you a quick little background on how I got to the 1031 world.
Yeah, yeah,
So
yeah.
I think it'll be good for context as I explain a little bit more about 1031. But
Well, let's do it.
I actually began my career 20 years ago in the real estate space. I was an agent, a broker,
Hmm.
started teams, and sold tons of real estate. I had about 2,500 closings under my belt. And then in 2015, I was like, oh my goodness, I don't know if I love selling real estate as much. And I was really concerned
Yeah.
about the long-term ramifications of having a business that I couldn't sell, just being real
Okay.
estate. And so I got into the tax space, opened an accounting firm, and ran that for 5 years. Sold that, and then my team and I were doing tax returns for clients. And then this question of what's a 1031, right? We started doing the form is an 8824, which is a writer of the tax return for a 1031 exchange, and we started
Okay.
doing these for clients. And then I was like, what in the world? Who helps people do 1031? And
Yeah.
so I started buying every book I could on 1031 topics because I was passionate about tax. I was passionate about real estate.
Hmm.
And so that's when I started my exchange company and kind of been doing that ever since. I have a
Okay.
couple other verticals that I do, but mostly every single day, I live in the 1031 world, and there are a lot of nuances to it.
And
I am a
and Mike,
certified.
just let me just ask you quickly, when did you guys get started with 1031 exchangeable?
So I started learning about exchanges almost 5 years ago. I opened my own
Okay.
shop in 4 years ago, and
Okay.
and then since then I got my CES designation, which is like it's like a CPA designation for an accountant.
Mhm.
But for 1031 exchanges, we're qualified intermediaries, so it's like a CPA for
And
QIs.
you said when we met, a few weeks ago, you had said there's not too many. It was like 120 or something, or 100
Yeah, there's
of you
less than
guys in the country,
120.
right?
Yeah, less than 120
Wow.
CESs in the country. Yeah, so kind of give you an idea of and there's probably about 40 or 50 of us that do really high level complex
Mhm.
exchanges, like our office does. But
Yeah.
back to your original question, like what
Mhm.
is it 1031
What
exchange?
is it? What are we talking
Yeah.
about? Yeah.
So the 1031 code is really designed for investors that own investment real estate to sell the investment real estate and buy another piece of investment real estate without
Mhm.
paying taxes. And so the IRS said, hey, if you're just going to trade it,
Hmm.
into another property, we're not gonna tax you with long-term capital gains and
Yeah.
depreciation recapture. And so they said, we're gonna allow this, and that's really been going on since 1921. And then we got a more robust version in the early 90s of what they call safe harbor.
Okay.
And we have the rules we have today that, and some modifications are along the way, but it's really the ability to sell a piece of investment property and buy a another piece without paying taxes.
Yeah. I mean, I love that. I got to ask just a little bit of a nerdy question off the bat. What is the most that you have seen? Like, what percentage of profits have you seen someone lose when they did not employ a 1031, right?
Yeah.
And
I've
conversely,
yeah.
conversely, what's, kind of the amount that you're seeing investors retain when they are, using a 1031 properly?
Those are great questions. So our average sales price this year is
Hmm.
about $1 million. Is our
Okay.
average sales price.
Yeah.
And it's interesting what's happened in the real estate market over the last since COVID, right? Is a
Mhm.
lot of these properties have doubled and people got massive equity. The
Yeah.
biggest property I've seen sold without an exchange was about $10 million. It was $5 million in gain, and they paid about $1 million in
Stop
taxes.
it.
Yeah, yeah. So
A cool mill.
that's the biggest I've seen, and that was a choice the family made. We had talked
Mhm.
a lot about an exchange, and for whatever reason, they decided not to. But
Hmm.
we average about a million. We average about 500,000 of that is gain. So on every transaction, on average, saving about $100,000 in taxes. Kind of.
Okay. Huge. I mean, 100,000, that's, yeah, that's equity going, that's a down payment. That's, that's other properties. That's you becoming part of a syndicate. That's so much, right? There's so much potential. So, um, you guys are operating nationwide, right? You said New York to Hawaii, which I love.
Yeah.
You're hitting everyone. What when like what when you think about 1031s, right? One of the biggest elements is that you have to identify the property that you're going to purchase within what, 45 days? Is that
Yeah,
right?
so the identification periods, and we'll get into like some of the top 5 things investors should know.
Mhm.
By the end of this podcast, I want people watching
Yeah.
the show to know, hey, I know the top 5 things, and I can generally explain
Mhm.
it to somebody. The top
No, let's do it. Let's do it
five.
right now. What are the top 5 that you can't you need to have in your back pocket
Yeah.
if you're investing? Mhm.
So the first is it's got to be an investment property. It can't be your
Okay.
primary residence. Can't be a second home that
Yeah.
you're not renting out. It's got to be an investment property. I had a CPA tell a client that they could not exchange land into a single family home a couple of years ago. And that's one of the most misunderstood rules. So, first rule is it must be investment. Second, you can
Okay.
exchange it to any real property. So, that can be land into single family into commercial,
It's great. Yeah.
commercial into stuff like oil royalties, which are allowed under the
Wow.
exchange.
So it doesn't have to be a one for one. It can
Doesn't
be
have to be a one
okay.
for one, yeah. So equal or
Alright.
greater value is the third thing I'll tell you. So if you're
Okay.
selling $1 million in real estate,
Mhm.
you have to buy at least $1 million in real estate. And that's the second most confusing thing about 1031 exchange. Is
Mhm.
any real property goes. The
Yeah.
second is equal or greater value. So not just the equity, right?
Mhm.
Not just your gain. The entire purchase price for the most part,
Yeah.
outside of some allowables, has to go into the to the new
I
property.
got a question. Mr. Velasco, can you pick me?
Yes,
I'm being
yes.
polite. I'm raising my hand.
There's
Um,
so many people with their hands up. Go ahead, MJ. You go first.
sorry, man. I got in line first. So, question, piggyback on that third one, equal or greater value. Let's say you have $1 million property you're selling and you've identified 5 replacement properties. Can you do multiple of 200, 250, right?
Yeah.
Whatever.
So there's a couple of rules when identifying the property. One's a three
Mhm.
property rule. You
Okay.
can identify any 3 properties you like of any value. Okay.
Okay.
If we are going up in value, we'll always use the 3 property rule.
Okay.
And you can only identify up to 3 if you're going
Okay.
up in value. Now, there's a
Got
couple
it.
of little nuance rules that will help you in a situation like you're talking about. Like I want to identify 5, and perhaps I want to purchase 5. I want to go from a million and buy 5 $200,000 properties.
Sure.
In those cases, we use what they call the 200% rule. And that
Okay.
is we can identify as many properties as we like, as
Yeah.
long as the aggregate value is less than 200% value of the relinquished property.
Oh,
So let's use
interesting.
our
So it's
million
like a
dollars
cap
property.
then. Okay.
A cap, but you can
Mhm.
identify more than three properties. So
Hmm.
$1 million relinquished property means we can identify up to $2 million in total real
Mhm.
estate, as many properties as we like.
And there's
And
no
so
limit. It's not
there's
like
no limit.
up to 10, up
There's
to
no
50.
as
Okay.
long as they are less than
That's interesting.
200% of the aggregate value of
Okay.
the relinquished property, excuse me. There's another little rule which
Mhm.
nobody usually uses. I've used it one time this year, and that is the 95% rule.
Okay.
The last of those rules is, hey, wait a second. I want to buy, a
Mhm.
bunch of properties, and they're more than three and more than 200%. What do we do? And that's the
Mhm.
95% rule. So if we sell $1 million properties and we buy 10 million in real estate, and we take the million and we chop it up to $100,000 down payments and buy 10 properties, well, we're past the 200% rule
Yep.
and we're past the three property rule, right? So we got to use what they call the 95% rule. And that is you can identify as many properties as you like as long as you close on 95% of them, which really means you need to close on all of them and for the most part.
Okay.
Yeah, all 10 of those, right?
So you have to close on them, but does that then trump the 200% rule, or and you're still allowed
You're
to.
still allowed to 95% roll. Yeah. So there's
Wow. Okay.
three property, 200% or
Mhm.
95%, as many properties as you want with 95%.
Mhm.
I've got one going on right now. We're going to use the
Mhm.
95% rule. And
Nice. Can you tell us about
he,
it? I mean, on a very
he's
broad sense?
basically, yeah, he's on the East Coast. He's going from one property and he's putting down payments down on
Okay.
five properties, I think it is. And they are above 200%. And, we've talked. I
Mhm.
said, listen, we're gonna have to close on all of these or this exchange is dead.
Yeah.
Because there's five. If he doesn't close on one of them, now he's at 80%, right? So
Yeah.
less than a 95% rule. So we just need to be sure going into the 45-day identification period, and that's an important
Mhm.
point, MJ, is 45 days to identify upon the
Yeah.
of the relinquished sale. So the relinquished closes, we got 45 days to identify,
Mhm.
and that's when we identify all those properties. And
Yeah.
you may be asking, well, what do you mean identify? What do we do?
Well,
Um,
exactly, and I was just gonna ask, you read my mind, is I know that your company handles, right, like, all the admin and the paperwork of what it is to process, a successful 1031 exchange, but do you also help vet or identify the replacement properties? And if not, do you guys work with others who do that, and offer those services?
Yeah, good question. And you might be asking another question along those lines too, is why do I need a QI anyways, qualified
Mhm.
intermediary? And that's what my company
Yeah.
does. The IRS says you have to have a qualified intermediary,
Oh, okay.
neutral third party.
Mhm.
Somebody can handle the funds and we're bonded and insured to do all that stuff, but
Yeah.
handle the funds during the exchange period because you can't touch the funds. The taxpayer can't touch the funds during the exchange period or
Yeah.
constructive receipt and the exchange is dead.
Mhm.
So, or failed, I should say. So, that's why you need a QI.
Mhm.
And to answer your question directly, MJ, we have a software that pumps out a identification form. The client's responsible, along with their real estate agent,
Mhm.
to get us those identified properties. And what we're going to
Okay.
need is the address and sometimes the legal description. And then we just DocuSign them the ID form, and then
Mhm.
that gets saved into our software, loaded on the cloud forever. Because if there's
Mhm.
an audit, there'll be a couple things the IRS will ask for,
Yeah.
and the identification form will be one of the first ones. Show me
Okay.
the ID form.
Okay.
Yeah.
No, that's great. What percentage would you say, I mean, if if this is even a thing, of 1031s don't take place simply because those properties, the replacement properties cannot be identified in time? And actually, hold on, let me just back up. What happens if 45 days rolls around and they need another 5 days? Or, are there any methods that exist to kind of extend, so to
Yeah.
say, that time
Good
period?
good question. Good question. So the answer is no. We can't
Okay.
we cannot extend the 45 day.
Mhm.
And the IRS in cases where that would happen, they call them accommodating accommodators. And what
Hmm.
happens if they IRS audits and finds that basically all of the exchanges that the QI did would then be compromised.
Okay.
And so it's a big rule that we can't
Yeah.
not only obviously, and then we've got our ethics bodies and our all of
Mm.
that stuff that we got to follow. But so the 45 day cannot stretch no matter
Okay.
what. We got to identify within 45 days.
How,
The
how long do
180.
you have to close then? Because it's just identifying the properties. It's not actually closing on them, right? You have
Yeah.
some amount of time after that?
Yeah, 180 days to close the replacement property. So 45
Okay.
days to identify, 180 days to close
That's great.
on a forward exchange.
Yeah.
Which is an interesting question. You're like, well, forward exchange. What other kind of exchanges are there?
Mhm.
And there are two others. There's a an improvement exchange where
Okay.
you can actually do improvements to the replacement property with exchange funds, which is a really
Okay.
interesting thing for our value add investors.
Yeah. That's
Um,
great.
and then there's a reverse exchange. And the reverse
Mhm.
exchange is where you acquire the replacement property first. And so then Jay may be asking, when would you need to acquire the replacement property first?
Mhm.
Well, we got a wholesale deal that comes our way, and this thing needs to be closed in 10 days. It's 65% of market value, and we love it. And we don't have
Got it.
time to sell the relinquished property. We need to take this down now.
Now, yeah.
So we use what they call it um, a QEAA or an EAT LLC is another term, and what that really means is the QI, our company acts in two roles. We act
Mhm.
as the holder of the property, qualified escrow exchange. I'm messing up the terms here. I apologize.
Oh, you're good.
Qualified exchange agreement, and
Okay.
that's where we're actually holding title to the property in an EAT LLC, which is a fancy term for a disregarded entity that we create. This
Okay.
LLC we create in the state where we're usually buying the property,
Yeah.
and we form this LLC and we hold the
Mhm.
property in this LLC. The QI as acts as the QEA as well.
Mhm.
We're holding the property until we sell the relinquished property. And so we
Okay.
buy the property, the replacement property in this EAT LLC. We then, at the end, after we sell the relinquished property, we transfer the LLC membership interest to the taxpayer, and then we
Yeah.
fund them for any money that is from the proceeds of the sale of the relinquished property. And may sound confusing, but really what we're doing is closing the replacement property first. We're going to own it temporarily because the
Yeah.
taxpayer can't hold the relinquished property and the replacement property at the same time.
Okay.
And then acting as your accommodator for that. And then when we sell the relinquished property, we reimburse you for any funds that you brought to the closing of the replacement property.
I
All that
mean,
to say, you can do it. You can do a reverse.
exactly. I was gonna say, hey, you guys are handling that, right? So we
We
don't
handle
we
it.
don't have to do that.
No, it's completely complicated and very, very. There's a lot of dynamics to them,
Yeah.
but we do them all the time, and we're kind of down to a science.
Mm. Well, I mean, I got to hear you speak, and it's clear to me that you guys know what you're doing, you know? So as a QI, as a qualified intermediary, I mean, I think everyone who's listening to this episode today, if you don't have someone in your wheelhouse as a 1031 expert, then obviously you should be getting in touch with Mike, right? Um, I want to ask you though, what are some red flags for investors when they are searching for an intermediary? What are some
Mm,
red flags to watch out for?
that is a great question.
I mean, I
So
want everyone to have their bases covered, right? So
yeah, I,
Uh-huh.
I and I was reading a Reddit post. It was so funny. This guy he commented. Somebody said, "Hey, I need a good QI."
Mhm.
The guy commented, "Anybody can be a QI." And he
Ooh,
goes, "I could do it. I'll
oh,
do it for free." And I go,
fail.
"Oh my god."
No,
So that's true in some aspects, not true in others. So
yeah,
the thing that you want your QI to be is preferably a CES. If you can find one, that
okay.
means that they pass a really hard test and they know their stuff and they've been in the business a
Yeah,
while. Okay.
yeah,
The other thing is a member of the FEA, which is a Federation of Exchange Accommodators.
okay,
If you're thinking in terms of like regulatory bodies, it's the ethics body, kind of like the realtor for real estate agents. It's the ethics body that sits over top
okay.
and
Well,
manages
the
the
National
contract.
Association of Realtors or
Yeah,
like that
exactly.
kind of
It's kind
governing
of the
body
same.
and yeah,
Yeah, kind of the
okay.
same thing.
Mhm.
Bonded and insured. What the guy on the Reddit post failed to mention is
Hmm.
many states regulate QIs, and they usually regulate them with E&O insurance and a fidelity bond.
Yeah.
So if you're acting as a QI without those two things, in many of the states, you
Hmm.
are committing civil and criminal penalties. Yeah, you can't do
Yeah.
that. Yeah.
Those sound like valid and reasonable, requests.
Yeah, we're
Essentially to
handling.
protect, right? Like.
Yeah, we're
Mhm.
handling millions of dollars for
Mhm.
people. We're creating sub
Yeah.
accounts. Those funds flow to the sub accounts as the transaction closes
Yeah.
in the taxpayer's name, and that's one of the things we have to do as members of the FEA is each escrow account has to be individually named and named in the clients, and they should be
Yeah.
signing off any movement of money.
Got it.
And
Okay.
so that's why you have to really, when you're working with the qualified intermediary, you want to make sure that they have those, at least
Mhm.
those baseline minimums. And then some states regulate even harder.
Mhm.
Idaho is one of them, which we're licensed in.
Okay.
Idaho makes you get in basically a title license, an escrow license, which is, I
Like,
mean, the package.
for the intermediary, you're saying it makes
Correct.
okay.
Yeah. The
Okay.
package, the underwriting package
Huh.
is about that thick that I've submitted for
Jeez.
my licensing.
Give us the top 3 states that are, like, the tightest on the regulations, and then the top 3 that are the chillest, the most lax, if you can.
So that's a good question. So you gotta really, I mean, and bond stuff in New York
Mhm.
and California. They're the two second biggest economies. Some of them biggest economies in the world. They
Yeah.
have their own tax bodies, like California, the Franchise Tax Board.
Okay.
Well, and from a regulatory standpoint, they're not that tough, other than the E&O and bonding, but
Mhm.
they are very difficult to deal with because they do not parallel the IRS and their rulings. And so we have
Okay.
national rulings and case
Yeah.
law, and then we have California that goes, we are ignoring that.
Yep.
We appreciate that.
Mhm.
We like where
Mhm.
their heads at, but we're not going to follow it.
Mhm.
We're not
Mhm.
going to allow that. And
Yeah.
so there's a lot of nuances dealing with the state of California that, as you can imagine, if you are selling a property out of California, you need to know somebody, a QI that knows the franchise tax board really well
Yeah.
and some of the
'Cause
rules.
it's its own world, essentially. Is New York similar? That's where I'm at,
New York
so
is similar, but
okay.
they just lost. It's funny. My attorney's out of New York. I think we talked about
Okay.
this.
Yeah.
MJ's in New York, and my attorney's in New York, and we were just talking about a favorable ruling, a drop and swap case, not in New York, which has really been problematic for investors in New York when they're dropping out of a partnership before closing.
Okay.
Got a very favorable ruling, which we are all happy about when we do drop and swaps out of New
Mhm.
York. And that will be very, very good going forward with New York. One less thing
Okay.
to have to worry about. Their audit rates probably from the state level are a little bit higher,
Yeah.
because of, both California and New York.
Mhm.
Um, but and I didn't want to miss the actual question, which was what states regulate heavy? There are three
Mhm.
real,
Okay.
is it kind of Maine, which you'll probably never do an exchange in Maine, right?
Yeah.
Unless people are leaving in
So
Maine. Hold on a
unassuming.
second. I got
Maine is so large and yet so unassuming. It always catches
it's,
me.
it's
A lot of
always a
drinking
little surprise.
1031s.
And then
What
they're
can you do?
regulating, it's kind of interesting. Idaho, which we mentioned, we're
Yeah.
licensed in, and then Vegas, or I'm sorry, Nevada has
Yeah.
had a lot of regulatory stuff, which they have a hard time staying on top of. But they're like, you need a license, and then you call them for a license, and they're like, we'll get back to you. So it's kind of funny.
It's a pain, yeah.
Really what they've done in Nevada is go make sure you have the and bonding and
Mhm.
really follow all of the rules that we say to follow, basically.
Yeah.
So those are
Okay.
the three states that really. Washington has some interesting rules too, but for the most part, all the other states
They're
like
okay.
Arizona. I'm in Arizona.
Yeah.
Um, the basically little to no regulation, and that's
Okay.
that's where things can get dicey for our investors, right? We're dealing in a
Mhm.
state with no regulations. You're giving your $1 million from your exchange for to somebody that's not
Doesn't have to
bonded or
necessarily.
insured. Yeah,
Yeah.
be careful
Mhm.
who you're dealing with.
That can be a Yeah, it's interesting to and it's I think it's a good cautionary tale, right, for folks who are listening. Um, just make sure that you've vetted your intermediary, right?
Got to, got to.
What role do you think, Mike, financing plays in 1031s, right? Does it
Great question.
complicate a 1031? Does it make it easier? Is it just part and parcel of what it is, or
And I'd say probably 60, 70% of our transactions have financing on them.
okay,
So
okay.
really think of it this way. And I'll give you a kind of a case study that will help everybody understand this.
Mhm.
The loan amount you can replace. So,
Okay.
but if you're going up in value, you can replace more. So the rule of thumb to think about
Mhm.
is the proceeds from the sale of the relinquished property. And
Mhm.
let's use the $1 million
Yeah,
example,
that's an easy
right?
one. Yep.
We
Mhm.
got $1 million total sales price, $500,000 in equity, $500,000 in a note, right?
Okay.
So we pay off, we sell the relinquished property for a million, $500,000 goes towards to the QI, right? We're
Mhm.
holding a half a million.
Mhm.
Our remember equal or greater value, so we have to go to $1 million in replacement
Mhm.
costs. We now then have 500,000 in the account. Well, wait a second. What if I buy a $2 million property and put 5 million or $500,000 down? Our loan
Mhm.
has gone up from half a million to 1.5 million.
Uh-huh.
That's allowable as long as
Okay.
all of the proceeds from the relinquished property, that 500,000, go towards the down payment of the property of equal or greater value. It's fine.
Okay. So it doesn't matter what the loan amount on the replacement property is going to be, as long as you use all the proceeds, okay, from your relinquished. Okay.
That's the way to state it, MJ. You said it
Yeah.
exactly right. As long as all the
Okay.
funds go. Well, let's ask a different question.
Yeah.
What about if the taxpayer only puts 400,000 down and walks away with $100,000 in cash at the end
Oh,
of the
interesting.
exchange?
Am I the teacher in this case? Would it
I
be
mean, I
the
think I'm just playing. I'm just
the
balancing
brute
things out to
project? Okay.
keep this thing keep this thing spicy. So in that case, the taxpayer would pay boot on that, and boot is taxable either purchase price going down or
Okay.
walking away with cash, and you're going to pay on that $100,000. We'll pay taxes on just that $100,000.
Okay. Okay. So you've saved the amount of taxable, yeah, income, exactly. And you've at least reduced it from what? Like, was it 400, 500 down to
Yeah,
100?
400. Yeah. So now instead of paying $500,000 gain, let's call it on that particular transaction, assuming that the basis was 500 and now it's a million, which seems to be like everything nowadays.
Yeah.
You are going to, you're going to save on the 400,000 in gain, but
Mhm.
not the 100,000. And so I find this to be a very common practice amongst real estate investors.
Mhm.
Real estate investors tend to be asset rich and
Mhm.
maybe not so much on the cash side, right? We're
Mhm.
always buying assets, always
Yeah,
buying
they're doing
assets.
something, yeah.
Yeah, and so it's a great way to get some money out. Hey,
Mhm.
dip get the beak wet a little bit
Yeah.
on the sale and
There you
still
go.
avoid a lot of good portion of the taxes. And it's probably
Mhm.
25% of my transactions. Somebody's walking away with boot and a little bit of gain.
Yeah.
It's not uncommon. Not uncommon.
Okay, that's interesting. Mike, is there such a thing as a partial 1031? Is
Yeah,
that
that would be it.
something? Okay,
Yeah, that
that
would
would
be
be
it.
it.
Yeah,
Okay,
that would be it. Yeah.
got it.
Yeah,
Okay.
yeah.
What just a quick thing. What are some other are there other names for 1031s that exist out there? I always want
Oh,
to know.
they
Do they
call
go
them
by give us like the quick and dirty.
like
Um
sometimes they call them starker exchanges. Like one guy, he was like really really cute in some ways. He's like, yeah, I want to do a starker exchange. I'm like, you mean a forward exchange? And he goes, no, a starker. And I'm like, it's a forward exchange, but I like where the guy, I like his
Sure.
excitement. I like that he
I'll
kind of
take
did some
it.
research. So Starker was it was really a case that happened
Mhm.
that legitimized a forward exchange
Okay.
in some ways. So
Okay.
there is something called a Bartel style exchange too, which is a reverse exchange that goes past 180 days.
Okay.
That
Mm.
case kind of legitimized holding on a reverse exchange, holding the replacement property for longer than 180 days. That's a non-safe
Mhm.
harbor exchange. And so there's
Okay.
something called the Bartel style exchange. Of an
Mhm.
improvement or construction exchange, the two are the same.
Okay.
We're taking sales proceeds and using it towards the improvements on the property. So I had a call yesterday from a client,
Hmm.
and she was going to be $50,000 short on her replacement costs. So she was
Okay.
selling for 400, she was
Yep.
buying at 350. And I
Mhm.
said, and she owned it cash, so she was going to have 50,000 left over, right?
Mhm. Mhm.
And I said, I said, Jane's her name. I said, Jane, why don't we do this? Why don't we take the 50, close in an
Mhm.
EAT LLC, and
Okay.
do improvements with the
The
$50,000 to the
50.
property. Let's do
Yeah.
kitchen, let's do flooring, let's
Heck
put a
yeah.
new AC, a new roof, whatever we got to do.
Hmm.
And at that point, what an improvement exchange allows you to do the improvements, use all of the funds, right, that we have, and then once I have those improvements into the property, then at that point I can transfer it. And that's why we need
Okay.
EAT LLC, just like we do on a reverse. I'm gonna hold it.
Yeah.
I buy the
It can't
property,
be
hold it,
touched. Yep.
$50,000 in the account. I cut checks to
Hmm.
the contractors.
Yeah.
Once all work's done within 180 days, we transfer the LLC to the client. So an
Nice.
improvement exchange is
Yeah.
fabulous, especially for my value add investors that are buying fourplexes that need work, or
Mhm.
any type of value add where we're raising the rents, thus raising the value through cap
Mhm.
rates.
Yeah.
It can be a powerful tool.
So you said there's the 1031, the construction or improvement, and then the reverse. Those are the kind of
Reverse
the three like
Right.
overall different.
Most of and then a
Okay.
bartel, if we want to get exotic, we can do a bartel. And then there's
Mhm.
one other MJ, and we'll get
Mhm.
super exotic here.
Let's do it.
I
Let's
don't want
do
to
it.
lose the audience, but there's
They're here.
a leasehold improvement exchange, which
Okay.
is an
Yeah.
improvement on land that you already own, which is very
Okay.
complex. I don't want to get too into it because it'll take probably 15 minutes to explain.
Yeah.
But there is the ability for you to do, let's say you own a lot and you want a
Mhm.
1031 exchange of property. There is a way to take that and build on the
Oh,
property
that's neat.
leasehold improvement. Yeah. Typically those
Love
are
it.
Bartel style, and they are leasehold improvements where we're holding the property for we're moving into another family member, and then we're doing
Mm.
improvements on the property, which usually take a long time.
Okay.
Yeah.
Okay. Well, like in the last few minutes that we have here with you, Mike, I want to ask, do you have like I don't know, maybe a favorite story of an investor that was, able to do a 1031, whether it was the amount that was saved, whether it doesn't have to be about that. It could just be about, um, I don't know, if it changed the trajectory for them
I got
of their
I got
investing
a good one.
journey. Yeah,
Yeah, I
yeah,
got a
yeah.
good one, MJ. Yeah,
Hmm.
so last summer, I was dealing with a very laissez-faire exchanger. Um,
Hmm.
just no worries, right? So I have battled an anxiety issue most of my life, MJ.
Yeah.
So I'm like it's
Like,
43 day, like the shot clock's
feel
coming
it.
out. We got to get a good shot off, right?
Uh-huh.
40
Uh-huh.
day 43, day 43,
Yeah.
right? So we're identifying properties, right? It was literally the last day we identified, and they picked
Oof.
three properties that were all under contract.
Oh,
And I was
okay.
like, I was like, are we sure we're gonna do this? Those are the ones I like, Michael. These are what we're identifying. I'm like,
But they're
they're
under
all under
contract by someone else.
with
This
somebody else, MJ.
Yikes.
Somebody
Okay.
else. So we
Not
identified
great.
three, and I go, okay, this exchange is gonna blow up unless one of these cancels.
Yeah.
And we get to about day 60, and I'm like, what are we doing, guys? And because we identified the three that were under contract, right?
God,
Thankfully, the one
I'm
she
getting
won.
anxious.
Yeah, me too. I'm just
Yeah.
like, can you imagine being the exchange or just like, yeah,
Yeah. Yeah,
no
it's
worries.
fine, whatever.
It's fine. It'll all work out. And it did. One of them canceled. The one she wanted, she was the backup contract.
Wow.
Went under contract. We closed the exchange, and it was
Mhm.
everybody celebrated. And so that was a cool one, just because I was like, this thing's dead in the water. We're gonna be, she's gonna be paying taxes on
Was it
this.
cool? It sounds like you had to start another, like, anxiety medication because of it. That sounds, like, rough.
Yeah,
Like
I mean, there's some things that I do for my anxiety. Magnesium, by the way. This
yeah,
isn't
there you go.
about health, but
Yeah.
magnesium changed my life.
Yep.
500 milligrams a night,
Mhm, mhm.
and a lot of push pull exercise.
Yeah, there
Really,
you go.
really kind of
There you
helps.
go. See,
Yeah.
1031, expert right here along with a little bit of self-help. just a little bit of
That's
self-care.
really what you want in a QI. You want somebody that's, is going to respond to
Mhm.
you in 2 seconds, and
Yep.
also cares just more than you probably
Mhm. Yeah,
do.
exactly. Oh, I love it. Well, Mike, it's been such a pleasure. I mean, it's clear that you guys, you know what you're up to, and you're passionate about it, which makes it fun. Um, I think, for anyone who's listening in today, please get in touch with Mike and his team at 1031 Exchangeable. If you're investing and you're moving properties, which you likely are, whether you're flipping, you're wholesaling, you're holding, you need to understand the strategy and at the very least have someone, in your wheelhouse who understands the ins and outs of it.
Yeah,
So,
and
yeah.
let me say this, MJ.
Hmm.
If you guys have questions about 1031 exchange, you call me.
Hmm.
You could go to 1031exchangeable.com. Just put your form, fill it with your info. I will
Hmm.
call you usually within an hour. And I just love talking about this stuff. So
Hmm.
even if you have like the most elementary question, by all means, run it by me. I'll talk it through with you, whether you hire me or not. I believe that the blessing of God flows through relationship.
Hmm.
And the more people I can be in relationship with, the better off my business is going to be. And I might not get you exchanged today, but in 5 years,
Hmm.
when you're ready to exchange a property, I'll be there. And so anytime, I'm a great resource for all questions 1031 exchange.
Yeah, we love that, and we're excited to see, all the things that you guys get up to. So thanks again for being here, Mike. We appreciate
Yeah,
you.
you bet. Thank you, everybody.
Yeah.